Hi everyone, how are you today? In the beginning of the year I received a book that called Heads I Win, Tail You Lose from Petrick Donohoe, and I saw in this book that it tried a financial strategy to reignite the American dream, and this book looked very interesting for me, so I decided to read this book. Today I will share with you what I've learned from this amazing book, how this book changed my perception on how to build my wealth, how to build my financial freedom, and how this book increased my financial education. Hi everyone, welcome to my channel. Moti Marili here. I am an online entrepreneur, and in this channel I will share with you all my knowledge on self-development, finance and online businesses. Before we start today, I want to give a quick disclaimer. I'm not a financial advisor, and all what I'm sharing in this channel, it's for entertainment purposes only. And also please subscribe to my channel if you haven't yet, and please hit the bell button below so you will be notified every week when I upload a new video. And please like my video and help me rank the video in the YouTube algorithm. With this said, let's begin. The first idea of this book is to increase your financial education. When you start your life and you start to save money, the first thing that you want to do, and we already talked about it here in this channel, is to start to save money for your emergency funds. I will share a link here down below for the video that I talked about it and why is it important to save for emergency funds. And when you start saving money and start building your wealth, you really want to put aside somewhere between 3, 6 or even 24 months of your living, and you put this money on the side for emergency. And if something happens, you always know that you can sleep good at the night because you always have money for 6 or 12 months or even 24 months. So if you lose your income, or if, I don't know, a crisis happen, you have enough money for your life, and you don't need to be stressed and need to do crazy things to earn money. So this is really the first step. And then you want to increase your financial education. You want to start to invest in yourself. You want to start read book, take course, hire a mentor, and increase your financial education. What the media here show you, it's you go to school, go to college, take a student loan, find a good job after you finish the college, start to pay off your student loan, get married, buy a house, take a mortgage, and then start to save for retirement. So one day when you will be 65 years old, you can maybe you will have enough money in your retirement plan saving, and you can enjoy this money. But it's not really true, and with all this things that the media show you to do, like take a student loan, take a mortgage, save for retirement plan, all these things is that the bank control your money, Wall Street control your money, and you don't have any control in your money. In this book, Petrick show you how the real wealthy people build their wealth and what their strategy on building their wealth. So the whole idea of this book is to replace your retirement plan, your 401k plan or Roth IRA or IRA plan, in investing this money and mutual life insurance policy. And let me show you here what's the benefit of investing in mutual life insurance policy instead of saving and investing your money in 401k policy or IRA retirement plan. When you're saving money for retirement in those plans, the 401k or IRA plan, this money is not liquided, and it's very risky because you're saving a lot of money. You contribute money every month, every week, every year from your paycheck, but in the end of it, this money is not liquided. They're telling you that you can use this money when you will be, some of them 59.5 years old or 65 years old, but all this year, let's say you start to saving in age 25 in average, I will say, all the way to 60 or 65, like 35 or 40 years, this money is not liquided, and it's very dangerous, and you cannot do that. if you're saving in mutual life insurance, this money is liquided. So for me, that was the biggest benefit, because I already start a Roth IRA plan a few years ago, and now in the beginning of the year I start to read this book, and then the Corona came, and the Corona hit around end of February, the beginning of March, and then all the people start to lose their job, everyone was in stress, and all the businesses go down. Some of the businesses go down, of course, some of the businesses make even more money, but then the crisis happened and you start to think, okay, I need this money for emergency, what I'm doing now, and you start to thinking where is the money and where you save your money. So for me, that was the biggest benefit, where in mutual life insurance, the money that you invest is liquided, and also you have many much more benefits. When you're saving in mutual life insurance policy, they will promise you a fixed return every year. When you invest in 401k, for example, they tell you, let's say for example, you will have 6% or 7% return on average. But it's not really true, because if you look on the S&P 500, for example, and you go back 20 years, it tells you that in average it go up on 6.78%. Just for example, here I'm giving here an example. Yeah, that's right, it's going up in average 6.78%, but if you invest $100,000 in the beginning of this 20 year and you go all over this 20 year, you will see that in the end, if you will look in this money, your average yearly return was, I don't know, 4.5 or 4.7 return. And let me explain you why. It's because the market fluctuates. It's not always every year going up on 6.78, 6.78, 6.78. Some of the year it's going, I don't know, 12%, some of the year 10%, some of the year 5%, some of the year is going in 0, and some of the year maybe it go down a little bit. So when the market fluctuates and when the market go down, you need much more return to go back to the same place that you have been. Let's use $100 investment here, for example. If you invest $100, you make 100% return on your $100, then you win $200, right? Let's say I invest $100 at the beginning of the year, I get 100% return by the end of the year, I will have $200. Let's say in year 2, I lose only 50% of my money, my value of my investment go down in 50%, then I go down for $100 back. But last year I gain 100% return. Now I lose only 50, I go back to 100. So when you lose money, it takes much more time to build this return again. So here again, when you invest in the 401k, they're telling you it's 6 or 7% annual return on average, but when you're losing, it takes much more money for your money to recover and to get back to the same result. So in average is 4 or 5%. But here, if you invest in a mutual life insurance, they give you a fixed return every year. So it doesn't matter if the market goes up or go down. You know, me for example, they promised me 4.5%, and also between 1 to 2% depend on the market. So I know that it doesn't matter what's happened, if the market goes down or go up, I know that I will have for sure 4.5%, and maybe I will get another 1 or 2%, but this is not for sure. So this was a very good benefit for me, and I know that here my money is liquided, and with a 401k I know that I can use that only on 60 or 65 years old. And also, when I say liquided, when you invest in a mutual life insurance, you can borrow money from your policy, against your policy. So let's say I'm start now to save in mutual life insurance, and after 10 years or after 20 years, depend how much I contribute every year, my cash value of the policy will be I don't know, 100 to 200 to 300,000, doesn't matter. I'm just giving you here an example. Then let's say after 10 years I need the money, some emergency happen, or maybe I have a very good opportunity to invest money and I need, I don't know, $200,000 right now. I can borrow money against my policy and I can use this money for whatever I want. But if I invest money in 401k or IRA, this money is not liquided and I can't touch this money. The money controls this money. And also, when you invest in 401k or IRA, there is a very high fees. If you invest in mutual life insurance, the fees are very low. If you compare 20 years, here you will pay much less fees, and here you will pay maybe 3 or 4 times the same fees and the same contribute that you will do in the 401k, much more fees, and in the mutual life insurance less fee. So there is a lot of benefit for investing in mutual life insurance. Now, how you can start to invest in mutual life insurance? So the first way for you is to read a book, Heads I Win, Tail You Lose, from Petrick Donohoe. This is a great book, very easy to read a book. Petrick will give you all the information you need in the book, all the benefit. He will show you all the numbers and all the information you need to know. So it's a very great book. Highly recommend you to read the book. Second, Petrick also built a very nice website that's called Heads I Win, Tail You Lose. And in this website, and in this website you can find a lot of resources and a free course that explain all the steps you need to take and show you all the information. I will share a link down below here to the book and to the website. And third, Petrick also have a very nice company that's called Paradigm Life. This is the company that Petrick built and help people to invest in mutual life insurance. So when you contact the Paradigm Life company, they will assign a agent for you, and this agent will help you all the way from the beginning till the end, until you sign on the policy and you will start to invest in mutual life insurance. This is how I start. When I start, I read a book and then I contact the Paradigm Life Insurance. They assign me agent. I contact the agent. We did like a few video call. Everything is virtually in the computer, so you don't need to go to their offices, so something like that. And they will give me all the information, and then we file the application, and then you show me the policy. Now each policy is individually. They make it more personally, depend what stage you are, how much money you want to contribute, and what is your age, and what is your health situation. So they give me all this information, we did all the application, we signed on the policy, and now I start to invest in mutual life insurance. And this is great. I highly recommend for you to do it. In conclusion, investing in mutual life insurance is a great way to build your wealth and build your financial future. For me, I personally find it much more better for 401k or from IRA that I had before. So I took all my money from there and I changed my portfolio. I put some money on the side in cash for emergency fund, and now I start to invest in mutual life insurance, and I enjoy all the benefits, the death benefits, all the cash value that go up, all the interest rate that go up, fixed interest that go up, and also this money is liquided, so if in the future I will need some money, I can always borrow against my policy. So I encourage you to do it. It's a great way for you to invest your money and build your financial future. Now, I also want to give a huge thank you for Ryan Daniel Moran. I received this book in the beginning of the year from Ryan. I'm a member in his 1% group, and every quarter he sends us a subscription box with few products and with books. So I received this book and I read a book, and that's how I start to invest in mutual life insurance. So thank you, Ryan. Also, thank you very much, Petrick, for writing this amazing book. I learned a lot from that, and you're a great mentor for me. And thank you for watching me today. Please leave a comment below and tell me what is your strategy to building your financial freedom. If you invest in 401k, IRA, or if you invest in mutual life insurance, or if you have other idea on how to build your wealth, or other tips or tricks that you can teach me. I always love to learn and grow. Thank you very much for watching me again, and I will see you next time. Thank you.